Good morning, everybody. Judd Dunning, DWG Capital Partners, just off with Scott Picken, just reaching out to your company quickly. He gave me a challenge to do this in less than 2 to 3 minutes, so I'll move quickly and you can get on with your day. And we want to keep this as easy as you can. Click of the mouse from the office to the house, and that's the specificity that we try to make in our investments. So we have a special situation here. I'll go ahead and share my screen. I put together a little presentation for you. DWG continues to expand. We are honored that we've used my 22 years in new market institutional real estate, expanding our portfolio across the nation. And we now have $55 million AUM, 8 states and growing. And we have plans to 3x the portfolio with our partners. So you're going to see and hear about that with us coming forward. We have a great agreement with Scott and his company for about 20% of our allocations per deal. And we went ahead and bridged you into the JALmarketing.com closing. So let me talk to you about that. We thought we'd put together a little special offer for you on this asset that we just finished. Just FYI, we just hit the trades. We're in real estate business online. We're going across the trades. This is how a lot of the industry calls us for these sale leaseback private opportunities that we generate, where you get to buy the best of it, American industrial real estate with defensible rents, below replacement costs, in great growth areas and great yield that we take the personal guarantees to deliver to you. Back to JL. Great deal. What this took time for us, and why did it take time? It took time because we have $600 million of guaranteeing revenues, 42 acquisitions during the year. We have a new 20-year lease, a corporately fully guaranteed lease. The site's been there for many, many years. They have 30 locations and growing, and that's what's behind our capital. And we're paying an 8 preferential right out the gate. And what we want to do, we bridge the closing. Want to give you a rare opportunity. If you get in that final amount of capital that we allocated to Scott and Wealth Migrate is for this month. We'll do something we've never done. We'll give you the full month of February as soon as you invest in March. So you'll have 2 months in one. We'll wrap the deal up. We bridged it for you. And why are we doing this? And let's talk about the market really quickly. So I will follow Scott's lead. I'm going to stop the share here for you. And I'm going to go quickly to our other presentation, which I will open now, our teaser. Here it is. Great. And 1 second, of course, maximize that. Great. Here it is. I'll go to my slideshow. And from the beginning, I will put the slide on the screen there, and I will share the screen with you again. And there we go. Not bad for a Gen Xer pushing 60. All right. So what's going on in the market and why is this time? This is an exceptional time. Cap rates have decompressed due to the 15, 16 Fed raises that we have out in the market there. So why sale leasebacks? Why now? Why this deal? Particularly, we're unlocking these sale leasebacks. M&A markets are constrained. Mergers and acquisition. People need capital to expand their business that aren't in real estate. So we take their real estate and we're able to offer that. The constraint is greater than it's been in many, many years. So right here, sale leasebacks are offering a cure for a tough market. So our particular brand of investing, finding an investor that owns the real estate, owns the business, needs to sell the real estate at a premium to us. Right now, the cap rates are higher than they've been. But there's a reason to know why is this the time to buy, and we're going to buy another 10 or 20. We'd love to have you along as our partners. Is cap rates were descending down to like sub 7. We're starting to lose deals right before the Fed unwind, right? So to 5.5, which is unprecedented. Industrial used to be like 10 caps with 20% vacancy. It's now like 4% vacancy, and cap rates are still very tight. But in the sale leaseback space right now, they need money to grow. So while they're waiting for the market to return, we're getting higher cap rates, which means when those cap rates decompress to those levels, we're going to have exceptional profits, the type that you're going to see in an add value deal in multifamily or building a new building. So we're really excited for that. So a really quick narrative of why now and why this matters. Look at the federal fund rate. This is what happens. They go up as quickly as they go down. So you have to know, I was the head of capital markets at Newmark Knight Frank for 20-something years. I've been doing debt equity. We've done a billionaire company the last 4 months outside of this platform, our own sister brokerage firm. So the U.S. Federal Reserve tends to go down 190 basis points in a 2-year period historically. You can see that on the charts, and I'll make these charts available to you. So, and how do you know when they're going to return? The American Fed, they they share the board members, they share their projections. And so look here, we're up here, 5, 6, 2 to 3 years right here. We're talking about a return to 4 to 3% money to 2% money again. So the world has known less expensive money to balance debt. So it's inherent. So if you go a little farther here, this is how fast they came down, the Gulf War recession, the dot-com bust. So if you look at that, that's like 11, 12, 15 different changes. As fast as they went up, they come down in big situations. So what's the one outstanding element? The pandemic office sector has trillions of dollars of CMBS liabilities. So if they come in and there's a blip in the next year or two, then the Fed should do what they've done in the past and reduce rates as quickly as they have to contain that. So that's the one unknown out in the global economy, I'd say. What are we doing? We're buying into 3 to 7 underneath the REITs, underneath the middle market companies. We have found, American businessmen who want to expand and are succeeding in America. Last company we did went from 6 to 12. Another company went from 20 to 50. Another from 7 to 90. Some we buy with high credit. JL's the strongest credit we've ever had. So you can see we have a inflation hedge hard asset, cash flowing asset, fixed rate cap, annual escalations. But we are driven by this interest rate environment. So I'm going to turn this off, Ray Scott, and wrap up. See if I can do it on time. I don't know if I can. So special deal for everybody there. We're going to go ahead, and if you get your money in this month, we've already bridged the raise, so we're closed. But we allocated this because we love working with Scott and the team. So I wanted to offer, if you bring it in within the next week or so, we'll pay you for February, and we'll pay you for March. As soon as March hits, within 6 to 7 days, the beginning of every month. That's what we do. We do monthly distributions. So a little special invite to the people at Wealth Migrate. Thank you for being part of what we do here at DWG. Onwards and upwards. We will see you on this deal. We have a couple other deals already in escrow. They'll keep coming. Thanks a lot. Judd Dunning, DWG Capital Partners. I'm not the shortest winded guy, but hopefully you got a lot out of that presentation. Thanks. And stop.